What's the average amount of people are coming in to raise or sell right now per property?
How much per property?
Yeah, like right now, what's the average size being raised or sold?
Most people will look to sell. This isn't going to answer your exact question, but like 30 to 50% of their equity.
What is that, like
I would
average
say.
150 grand right now a deal, or what is the average deal size, I guess?
So the last property we actually launched our first mobile home park, I think late last week. The owner, I believe he's looking to sell maybe like a PK in equity, which would actually be closer, I would say, to like 80% of their equity. But again, there's people that might just want to sell 20K in equity. There's people that want to sell 90%. So
I
they
know,
can
I know.
use all that money to buy more
Straight
properties.
to
What's
the
up?
What's the average size? You're saying 100?
I don't know the exact average size, just because we have like multi-million-dollar properties that are worth 200,000.
What's the average
The
number?
best way to describe it is like the percentage of equity they're selling, I would say, which is usually around like 30 to 50%.
What's the average number of people in a deal?
Tough to say. There's properties with 50 people. There's properties with a couple hundred people.
Let's take a couple hundred. Paul needs to do a $10,000 repair. How does that algorithm work? Meaning, does it weight it? And then once it just hits approval, the rest, it doesn't matter if the rest of people come in and vote, or how does that work? Because I know when you deal with people with small checks,
Right.
I don't want irresponsible.
It's essentially based on the people that do vote. And so based on Paul's ownership, he can see what his voting power is and the percentage of people that do vote that need to actually vote for that repair to go through.
So if there's like 100 people, and he might only need 20 or 30, like how many people got to respond to get the approval?
It really depends. This is all so for each property, there is a separate operating agreement for each property. And I could post wherever it's helpful. We have an entire walkthrough of the governance system. So you could see if you own this equity, this is how much voting power you have. This is how many people need to vote. This is something I would say this and accounting. And we've spent the most time, which you never expect, like going into a business, to spend a lot of building like a governance mechanism or algorithm. But I'd be happy to share that with you guys. It's in the operating agreements too, for on all the property pages.
I guess just, what are the other things that we're blindsided by on the other side, that where are problems arising from any of the deals that have happened on the platform or are currently operating? What are the problems people?
Right. Well, I would say early on, because we've been doing this for 4 years at this point, our model was different early on. Back then, people would list 100% of their properties on the marketplace. They'd be purchased purely by investors under an LLC, under a new DAO, and then they'd be managed by third-party property managers. And so early on, a lot of our users were coming over from crypto, and they wanted more kind of high yield, high risk properties, I would say, in markets like Akron and Cleveland and Memphis. And naturally with those types of properties, there tend to be more issues. And when you're dealing with third party property management companies, even the institutional ones, they could just take the turnaround time is just pretty significant, at least from what I've seen, like a week for the QC inspection, 2 weeks to get turn estimates. And so we ran into a situation where like people could kind of see the platform as a way to sell properties maybe they necessarily didn't want for whatever reason. And so really the genesis of the co-ownership model was to align the incentives between buyers and sellers to get rid of any adverse selection. And so early on launching these types of properties, we kind of had to really, again, just learn as we go. We had to create this mechanism to create capital calls and a loan structure. Like we have a universal lending DAO that people can contribute funds to that can provide loans to properties that don't have enough funds for repairs. When you purchase tokens in a property, you contribute an additional 2.5% of your transaction value towards this reserve, which again is used for repairs. So at this point, we really like to, I know this is going a little off the subject. We like to think we kind of seen it all. Doing this for so long, especially launching with those initial types of properties. I'm sure we haven't, but again, really our goal, like at this point, is just allowing the investors to be ready for anything. So if anything comes up, we have that infrastructure and technology to allow them to do a capital call, do a loan, whatever the property needs, they can do it and they can do it quickly.
So are there properties in, say, trouble, crime-ridden neighborhoods that you guys don't want on your platform potentially, or no?
We're a marketplace of if you have a property you want to list, we will list it. And we're not making decisions. We're not doing due diligence personally on the properties. Of course, we require inspection reports and all the necessary material. We will let that person know that based on our data, you will not likely be able to hit your equity goal if you're looking to sell X amount of equity. And we even have a Discord channel where it's like a property preview channel where we post properties that the seller is interested in listing just to get feedback. We've had situations where we posted a property and people could thumbs up or thumbs down it. And the seller was really excited and it got, 50 thumbs downs and 1 thumbs up. And we're just like, look, like we don't control this. Like this is the feedback. This is the sentiment of the collective opinions of these investors. You're welcome to list it. But that right there gives you idea of what to expect in terms of.
I think one of the great aspects of what your company does, what Lofty does, is if I have 70 or 75% LTV on my mortgage on a property, yet I've still got cash locked up, I wasn't able to get all my money out, I can get up to 90%. So I can unlock some more of that cash to potentially use for another deal. I think that's probably, that's something I'm looking at it for. It's probably what a lot of other investors would be looking at it for too. And for people who don't want the whole tax sale, like Cameron's talking about before, where if he sells 100%, he's got all the capital gains, long-term capital gains he's got to pay. But if he sells just a portion of it, he doesn't have as much to pay in taxes. So you'd almost save it for years where, all right, I got flexibility. I'm not going to pay as much in tax this year. Maybe this is a year to take the sale and sell more of the property. It does give you some tax management ability here, strategic tax.
Exactly. And with the ability to 1031, this is actually kind of new to us. It's something we've been looking into for a while. Technically, you can take the proceeds from selling equity in 1031 into other properties, like properties on Lofty. Or you can 1031 into a property outside Lofty, and then you can launch that on Lofty. And so you can use this as part of your really scaling, like rinse and repeat process that the more experienced sellers will do on our marketplace. And I guess that takes me to another thing. Like whenever, and Paul, I think I even mentioned this to you, like whenever someone wants to list a property, I always recommend chatting with the other sellers that have listed properties in the past. This is a good way to hear really from their perspective how the process went for them. Because again, these are third parties. These people obviously don't work for us. They're people that either came to us through a referral or directly. And so we always recommend like chat with the other sellers. We're happy to give you any of their numbers. They're in our Discord, something that we always recommend, again, because we're just very confident in this approach and how it's worked out both for sellers and for investors.
On the purchase side, the limit order or the marketplace, we'll call it, you could always leave a buy order at a certain price in
Correct. Yeah, exactly. So you might go to the order book and see that there's a limit order for $10 at, or 10 tokens at $50 per token. You could put in a limit order at $49. So it's not going to match, but people can see, all right, I could sell my tokens into $49 per token, slight discount. But yeah, you can place multiple limit orders on each side. Totally up to you.
Does people know who the seller is?
They don't know. In the order book, you'll just see like 50 tokens listed at $52. Everything's tracked on the blockchain. So if you were to go to this property specific token, look at the transactions, you could see whose wallet address it is. But of course, you wouldn't be able to know who that person is, except for the seller. It's somewhat obvious what the seller's wallet is because you could see on the blockchain that this initial wallet received all of the tokens. So obviously that's the seller.
So have you found in the last couple of years any periods based on economic conditions or news, let's call it sellers wanting to bail out of tokens and being a little bit illiquid, that people are buying back those tokens at below value?
At times, like maybe when we have like less volume on the marketplace due to like macro.
Also, those tokens, and then somebody in the market's going to shit. People are getting scared. Paul puts in the bids at $20.
Yeah,
$20 because he just leaves it out there. If someone wants to dump them, he dumps them. He collects it back, and it's a kind of a illiquid market, right? So you're kind of looking for a.
Well, it is liquid.
Needs to get out of their position, right?
It is liquid because you can place you can sell instantly anytime because you could just place a market order. With a market order, you pay an additional 2.5%, which goes towards everyone that's providing that USDC liquidity to the property. And so you're paying a higher fee, but it allows you to get instant liquidity. And this will be my last tangent, but I don't know like how familiar the audience is with crypto, but essentially what we're doing is very similar to how it works like with the stock market. Like with NASDAQ, NASDAQ has market making companies that are constantly buying and selling shares at, say, Tesla, and then making a spread. So this allows you to buy Tesla without actually having to match with someone on the other side. We've done the same thing, except instead of working with market making companies, we've taken a DeFi approach where people from around the internet come to our website and can do that market making and provide liquidity for both instant buys and sells. And so to your question, maybe the market price for a property, maybe there's a delinquency in a repair. So the market price might be $35 per token. So you could sell instantly at $35. You'll pay that additional fee, but maybe you'll want to place a limit order to sell at $40 because you'll net a little bit higher. Maybe someone comes in and places a limit buy order at $36 and $37. It really does act really just like the stock market, but behind the curtains, we've just taken this DeFi approach compared to like what the NASDAQ does, working with like institutional market makers.
On that liquidity